You have conversations with people who have not been deeply in the fixed income space. You say, what is fixed income? They say it's bonds. You say, well, what does bonds mean? They say, well, you can buy a gilt, or you can buy a US Treasury, or maybe IBM issues a corporate bond. So I think the first thing about fixed income to understand about the complexity for people who are not fixed income specialists coming into the space, or anyone trying to index it, is that fixed income is not really one asset class. It's a series of sub-asset classes which are each meaningfully different from each other. G7 government bonds, investment grade credit, high yield, emerging markets, levered loan, repo, money markets. These things are all different parts of fixed income, but they are fundamentally different from each other. The second problem is once you identify one of these sub-asset classes, the sheer number of securities. So in the equities space, if you think about tradable international equities, you're talking about 70,000 listed equities. If you start to think about fixed income, you're talking about 9 million securities. So the sheer number of securities across the asset class is huge. Even when you go into a sub-asset class like US investment grade corporates, you're still talking about hundreds of thousands of bonds. So if you want to index large cap US and you select the 500 companies for the S&P 500, you're picking 500 from a relatively small group. You're not eliminating names and getting into huge arguments with people about who should be in and out. If you're in the fixed income space, you're going from several 100,000 securities down to a few thousand. So you're having to eliminate the vast majority of the securities. So it is a meaningful selection process. So then the third problem is if you identify which securities you care about, getting data around the securities is very difficult. If you pick an individual fixed income cash bond and you try to say, is it liquid? What price does it trade at? How often does it trade? All the things you normally need for an index. In most markets, it's very hard to get this data because they're not traded on exchange. They're traded OTC, they're traded through a variety of channels that are not monitored, and data is not collected in an organized way. The only two markets that have really good data collection are obviously the US Treasury market and then the US corporate bond market, which has TRACE. You do that for the US corporate bond market, that seems big, but it's still only a few 100,000 of 9 million securities. So you can start to see between the heterogeneity of the asset class, the number of assets, and then the data that's available, this is a serious challenge from an indexing perspective.